Good morning, everybody. Greg Bader, CEO. We just a little bit of housekeeping. We're recording this and we'll post it online after the meeting this morning. Thank you, everybody, for joining. I'm just going to, I guess, run through a bit of what we achieved last year, what we're looking forward to for next year, and as Gary mentioned, happy to take questions, of course. Rightio. Before we kick off, I just wanted to cover something. You'll see this roll out over the next month. We've used the last few months, I guess, in readiness for next year. We're launching of Rent Pay, probably the first time you're going to see above the line marketing, etc. from us. So it was important for us to come back, look at our business and restate what we stand for. So this involved customers, involved all of our staff, and involved our board. And it was really everything from setting our purpose right through to our values and our behaviours. So that, as I said, this is something you'll see come out over the next month, but fresh face, ready to take on the new year. A bit of a summary. We've mentioned in our previous quarterlies with COVID and whatnot, and like many businesses in Australia, around April we took a fairly big hit. As everybody shut up shop, with two main revenue lines for us, which is of course advertising revenue, and that's been, I guess, well covered in the media, what happened there. And then with the lockdowns, we found that people weren't really looking for homes at that time. There were more important things to worry about. Positive though, since then we've come back. Different products have recovered at different rates, but we're certainly in a great spot at the moment. And a couple of things on this slide, I guess, to call out is 75% of our traffic is organic. That allows us to reduce our marketing spend while still growing our traffic. Another important, I guess, feature of our traffic is around 70% of our customers are new to us each month. And that contrasts quite markedly with some of the other large portals. For example, Domains, around 22% users each month. So what that shows us is that very much the nature of renting, people are looking for that 4 to 6 week window, and then they're off happy in a place. And it shows that our traffic's much more engaged, coming in to do something. We don't have a large population of snackers on our site. We use this slide quite a bit, but it's important. Renting is here to stay. It's growing every year. And what's interesting, we look back and we're nearly 1 million resumes now. So we have some fantastic data on renters. So we look across our community, we see that 60% of our customers are millennial or below. And what's even more important here is that the fastest growing segment here is what we call our logical renters. These are people that are renting because it absolutely makes sense for them to do so at this time in their life. And you know, there's many reasons for that, but you're young, you've taken that new job in Sydney or Melbourne or Brisbane or Perth. You're not going to jump into a mortgage straight away. You want to secure yourself. You still want the flexibility that renting offers, but you don't want to tie yourself down to a mortgage, etc. What's interesting here is that 24% of our customers are saving for a property or own a property they don't intend to live with. So that's our rent vesting community as well. Renting cycle, we've used this slide a couple of times. Rent.com today, we play in that search phase, and the orange icon's on the screen there. And Rent Pay is going to allow us to move into the tenancy phase. So just covering off the core part of our business first. It's got to be an easy way to change this. So rent.com.au is all about helping people find their home, and we'll just cover off a few highlights in there. So we have our products. The products have all had a cracker of a year. Rent Check still continues to be a lead product for us. It's dropped off a little bit, but it's made a strong recovery, and last month is even better. Rent Connect, we recently re-signed our partnership with AGL. That's going great. And in fact, from an earning point of view, it's never been stronger. Rent Bond was one of our products that probably saw the greatest hit, and it's been well publicised, the number of people taking early access to superannuation, etc. Obviously, a large portion of those people were renters. We've seen strong recovery, certainly in the last 6 to 8 weeks. Different markets in different places around Australia are heating up at different rates. What's interesting on this one is the new feature we introduced with the 21 days interest-free. That allows someone specifically to transition from place A to place B. We can lend them the money and zero cost if it's paid back within 21 days. So it's putting a bit of a buy now, pay later flavour, or that convenience flavour on the product, which has made it even stronger. And look, just a bit of a summary of our numbers. Key KPIs for us, everything's tracking in the right direction. Really impressed where we're going. And as we've mentioned previously, last month's building on these even more. Profitability, we announced in our quarterly that the core business, if we exclude RentPay, is profitable. It's been a long road for us. If you remember back to 2016, we were, I think, 5 million in the red. So we've turned the business around, we've repositioned the business, very much focused on the consumer, our customers. We're working with our partners, we're building strong relationships with our core partners, and we've got to that profitability point. We make no apologies for the continued investment in RentPay. We see RentPay as not only a natural extension for us to move into that tenancy period, but we see it as a wealth vehicle for the future of the business. So moving into the tenancy period, it's absolutely makes sense for us. We're the only portal that builds that relationship with the consumer. The challenge we have is that with our rent.com.au business, we only see 5% of the market at any point in time. 95% of people are happy in their tenancy. So how do we build and maintain that relationship with everybody? And moving into the tenancy period is key for that. And payments is absolutely the logical vehicle. Everybody needs to pay their rent. It's an area that really hasn't been looked at from a consumer point of view. It's an area that has a lot of challenges and issues, and it's something that everybody needs to do. When we launch RentPay, it'll have a few basic features. Now, we spoke to our customers. We didn't just make these up, and this is what people are telling us they want. There's a number of features I'll cover here today. There are also a number of features I won't cover here today. We'll save them for launch. But simply on the top line there, 56% of our customers are telling us that they want flexibility. So imagine from a real estate agent's point of view, they want certainty. They want the rent paid on a specific day. They prefer monthly. It just minimizes their accounting and the work they need to do. But on the left-hand side, we have our customers that are wanting to pay when they want to pay. Now, whether that's syncing up with your pay because it's your largest expense, or paying weekly to allow you to manage your budget a little tighter, they're the sort of features we'll be offering. The casualisation is an interesting one, and we have people now that are looking forward to 12, 14 weeks time. They've got a holiday coming up, they're not going to have income, so they want to build that buffer. So this is a key function that we'll be providing in RentPay. Along with the buffer, there's also I guess the opposite of that. We'll be providing emergency funding in there. People are very protective of their renting history. They don't want a black mark against their name. So this, we're providing an emergency line of credit here. That if someone's car blows up on Wednesday, the rent's due on Friday, we'll be able to position them those funds, and it'll be structured in a buy now, pay later type payment schedule. Easy to understand, easy to use, instant. We think that'll be a great feature. Utility bills are interesting. We're working with a number of partners in this area, but strong support from customers. We had over 40% of our customers asking us to pay their utility bill. Now, whether it's just simply a convenience all in the same platform, or if it's a budgeting where I can pay a little bit each week. And there's a strong demand for this, and once again, something that we're keen to bring to market. So revenue potential, I need to stress, this is not a forecast, this is just an example. We obviously have an existing RentPay product today. We know how that performs, and the new version of RentPay we're releasing, we're able to articulate, or if you like, estimate at different market shares what the revenue opportunity is. This is just RentPay. It does not include the self-reinforcing loop back into our core portal business, allowing us to offer renting as a service to our agent partners, etc. So as you can see, the opportunity here is substantial, and it is why we're investing the time and energy to bring RentPay to market. The probably from an earnings point of view, one of the key opportunities for us as a business is that under our portal business today, all the revenue we make, we sell again the next day. So it's very cyclic. By moving into RentPay, we start to build up that annuity revenue stream, important for us as we go forward. And I guess just a summary where we are, we have app releases coming out every week. We've completed our base testing with our partners, transactions going between banks and between wallets. We're able to do testing now from the app, simulating customer testing. We have a number of people involved in the testing. We have key partnerships locked in. It was crucial to have Novarti, who are not only bring the wallet functionality, but they're also bringing to the table some unique and different payment options, once again, to offer flexibility to our consumers. ANZ, largely regarded as probably the most forward-thinking and technical bank. They've been a great partner with us, and Fairgo Finance, who existing partner of ours, providing the bond finance, will be facilitating the credit product under RentPay. So everything's a lot going on at the moment. We're planning for launch next quarter. Everything's on track, and we're looking forward to this. So I'll hand over to Jan, our CFO. Jan's just going to cover off our results in a little bit more detail. Please, once again, if there's questions, type them in and we'll get to them as soon as we can. Jan?
Thanks, Greg. Looking back at the last 12 months, probably the most pleasing bit for us was reducing our EBITDA loss by almost 50%. So we halved our loss compared to previous years. A lot of that was driven by revenue increase. Greg's already mentioned the products and advertising sales that both grew. We did have our agent revenue continue to churn a little bit. That hasn't been a focus for our business. We remain focused on the renters. With the growth in our organic traffic, we've been able to wind back the marketing spend. So our cost of sales came down by almost a third, and we remained focused in terms of our operating costs and bringing that down. So all of those aspects contributing to a really good result last year. The improvement trend continues. From a revenue perspective, we're expecting this half to end somewhere between $1.3 and $1.5 million in revenue. That's based on the fact that we had a record quarter for Q1, $750,000 in revenue. October was a record month, but we do expect that November and December will slow down. We normally see it slow down every year around Christmas as less people move. From an EBITDA perspective, despite the fact that we've continued to invest in RentPay, and in fact that investment is increasing, we do still expect to see an EBITDA improvement for this half. On the renter products revenue, so again, as Greg's previously mentioned, RentCheck has done fantastically well. Particularly the Rent Connect product through AGL has been probably the biggest contributor to growth over the last financial year, with Rent Bond also increasing over the year. And while that took a bit of a hit in the last quarter of the financial year, that is starting to improve back again. So we're expecting continued growth in the renter products revenue and continued strong growth. Advertising sales, if you remember, that was something that we'd struggled with a little bit last year. We weren't alone in that. We did hire a new team, so we expanded the team and hired new staff towards the middle of last financial year. They've worked really hard and been able to increase their engagement and build really good relationships with key advertisers. We're now getting over 60% of our advertising revenue from recurring contracts, so 3 months or longer contracts, which takes a lot of the pressure off, helps us better optimize the advertising that we are delivering for customers, which improves their return on investment. And if advertisers are happy, they tend to renew, which improves our revenue. So we've got a strong sales pipeline, and unlike a lot of other businesses in our sector, we're actually improving that revenue, and it's growing very strongly. On the cost side of things, over the last year, we've shifted staff to focus on the rent pay business and building that business. Greg's outlined why that's really important to us. At the same time, we've been able to optimize and we remain focused in terms of our overhead costs. We've reduced some of our systems, consolidated those, and collectively that cost saving has allowed us to redirect those savings into rent pay, and we'll continue building out rent pay. Marketing's probably been the strongest performer. So as more people are aware of rent.com.au, as we've improved our site and our app is rated higher than any other real estate app in both the Apple and Google stores. All those things contribute, and so we get more people coming to our website and to our apps every month. At the same time, we're not spending as much to get them, so we don't have to pay people to come to our site. They're coming because they know about us. They're buying more products, and collectively that's making our marketing a lot more efficient. So compared to the last financial year, where we 41% of every dollar we earned from revenue was spent on marketing, that's dropped down to 16%, and we're seeing that continue to improve. I'll just hand back to Greg to summarize.
Thanks, Jan. The summary is we've had a bloody cracker of a year, and we're positive where we're going. One of the most impressive things I think is we are 21 staff. We are building what is one of the most complex and disruptive payment engines for the Australian market. At the same time, is increasing the efficiency and performance revenue of our core business. So the team's done a fantastic job. We bat well above our weight. Heading forward, we know we're cyclic. We know the December quarter is always a little bit down as people choose to go on holidays, even staff evidently. But we're looking forward to it. We're getting ready for the rent pay launch. We know January is a strong time in market. We're building up our partnerships, our relationships. Pipeline's looking good for revenue. We've got a few little product tweaks coming through. As I mentioned right at the start, we're repositioning our brand. We envisage next year to actually start taking our brand further than just our existing customer base, which is exciting, and hence some of the work we're doing, which you'll see over the next few weeks. So I guess the summary of that is we're head down, bum up. There's a lot of work to do. We're not there yet. The portal business is firing, and rent pay is about to change the world in terms of the payment industry in Australia. So yeah, everybody have a great Christmas and strap in for a cracker of a new year. Questions? Have we got any questions?
Yes. So firstly, there's a question about how much JobKeeper support the company received in the last financial year. So we received around about $60,000 a month for the 6 months, so 360,000 all up. That was for 17 staff that we retained through that process. Second question, just our estimate of the market share that we have in the industry.
Yeah, that's a really interesting one. So it's a little tough, I'll be honest, to measure it accurately. Obviously, we have our 2 large competitors who are also owned by the 2 largest media organisations. So there's a little bit of a bias in the reporting. So we have 700,000 humans come to our site every month. We know about 85,000 properties are rented in Australia each month. From previous Nielsen research, we know that about half of our customers do not go to REA, and we know about, I think it was about 65%, Jan, that didn't go to domain. We can look at various rankings on keywords on Google. We can look at various external traffic sources. We not only measure our site in terms of net traffic against our competitors, because obviously we're rentals only, the others have for sale and commercial, but some of the key metrics, and we have reported on these before, are around page views, bounce rates and whatnot. So it's difficult to measure exactly. I'm quite comfortable that we rank about third in the portal businesses in Australia, but once again, we are certainly the largest rental only. We have a huge audience coming to us each month. We know that thousands of, last month was 90-odd thousand applications and inquiries. We know thousands of people get into rentals via us, and we can see that through our bond finance. We can see that through our utility connections. So quite comfortably, if you go to the App Store, we're the third most popular real estate app in the country. We're the #1 rated real estate app in the country. And on a web basis, which is about half our traffic now, into half our resume creation, we sit around #3. So that's kind of where I think we fit.
We've got another question. Does the company monetize or charge for Rent a Resume? And if not, why not?
That's an interesting question, and it's been subject of some debate internally. Do we charge for Rent a Resume? No, we don't. Should we? Point of debate. I like the fact that the Rent a Resume provides a utility for people. It allows them to enter their data once and then apply or inquire on multiple properties. So what we do know though is that Rent a Resume is our #1 lead for product sales. So indirectly, we have an ARPU per resume, etc. So it allows us, because it's a process people go through, and when you're applying for a property, there's quite a bit of data that needs to be collected. So at the right time in that process, we present people with different products. So does the resume add value to us from a financial sense? 100%. It's our lead generator for product sales. Do we charge for it? No. Do we want to charge for it? Not today. I don't think there's a need to. It's fulfilling its purpose.
There's another question regarding rent bond, and specifically what the working assumption is in regard to renters repaying the bond within 21 days, so the interest-free. I could probably answer that question. So what we're seeing is it does fluctuate from time to time, but generally we see sort of anywhere between 5 and 20% of renters repaying within that time frame. It's a very important feature for us to have that available. But what we are seeing is that people do get their bond back and then decide that they might actually just apply that loan to other moving costs, whether that's everything from actual moving costs through to furniture, etc. So most people do continue on with their rent bond loan, even if they have got their bond back.
Thanks, John.
We've got another question about the uptake of Rent a Resume from real estate agents. Yeah,
that's a mixed bag. There's really two major online application forms, if you like, in the country. REA's one form, which Domain use, and then Rent a Resume. The uptake on it, just like one form, there are some agents that love it, there are some agents that hate it. Vast majority of agents are ambivalent. So what we allow a customer to do is when we submit the Rent a Resume electronically, it comes through as a PDF, and we also allow the consumer to take it. It's a personalised form that has all the agent details, the property's details, and obviously the renter's details as well. So some agents, the majority of agents will take an application or a lead in any format that is given, whether that's a walk-in, a sticky note, or someone applying and rocking up on the day. So it's hard to measure exactly, but certainly they are being consumed. Now we're doing a little bit of work on the side with some of the real estate institutes to make it easier for agents to digest, and certainly some of the secondary release phases of rent pay will enhance that. So it's something we're conscious of. We would love Rent a Resume to be the #1 online application form in the country. that mantle is held by REA today, and we're looking at it.
If there's any further questions, please type them into the Q&A section. We don't have any further open questions at the moment.
Well, it doesn't look like we've got any more questions. Before I hand back to Gary, just want to say thank you. And please, if anybody does have a follow-up question, just ping us at investors@rent.com.au. Jan and I read those and we reply pretty quickly. And thanks everybody for joining this morning. And back to you, Gary.
We just have another last question popped in. A new competitor in Sorted, and what's our feeling about the competitor threat?
It's an interesting world, PropTech and FinTech. It's equal parts fascinating, frustrating, and exciting. Frustrating on seeing some of the valuations, to be honest. We seem to have a new startup every week or two, and then we seem to lose one every week or two as well. Look, there are some great ideas out there, and there are a couple of opportunities where we're talking to people about. There are obviously some things we would like to do in our business as we grow forward, and I'm very much on the view that if I could acquire the technology through partnership or acquisition, then that's something we need to evaluate against building it ourselves continuously. So certainly there's some opportunities that are interesting. One of the key strengths, or two key strengths that rent.com.au has that I think a lot of startups, specifically in PropTech, fail to realize is customers. It is ludicrously expensive and time-consuming to get an audience. We're up against 1.5 giants, and the domination of the media space means it's just your share of voice. To get that voice is really tough. The second one is getting the listings from real estate agents. Now, we've done really well. It's something we continue to focus on. It's tough. It's tough from a technical sense. There's a lot of integration. There are a lot of B2B relationships that need to be formed. And then there's a lot of communication to the agents as well. So, I think they're two key strengths. And as we've seen over the last 2 years, they're an area where some of our competitors have fallen a little short. But, without specifically speaking about Sorted, there are some interesting opportunities out there. And I think, we want to change the world. We want to disrupt. I think we already are material in the market. I don't think there's any doubt on that, but we want to be bigger. We want to be better. The tenancy period is very much an area of interest for us. And there are some adjacent technologies and services and solutions that we think we could, plug together, join together to make an even more compelling service or solution for customers. So it's something we're very conscious of. We have chats with others. We look at others. But we're comfortable where we sit.
No further questions.
No further questions. Okay. Well, on that note, I'd like to formally close the meeting.